Okay. Hello, my name is NURUDDIN bin Abdul RAHIM. My metric number is 3004889. Okay. First of all, I want to discuss about background company, Hypec Healthcare and Al-Aqar Healthcare. Hypec Healthcare has been focused on making marketing consumer healthcare product and medical device available to customer in the market in which they operate through manufacturing and distribution, and in a manner which fairly rewards all stockholders. This company has established in 1962. This business intimately and have a growing network of loyal customers. The secretaries of company is Chu Won Wee and Chong Yok Peng. This office is located 1 until 5 Jalan TTC 1, Cheng Industrial Estate, 75250 Melaka. Apec's mission is to bring better health and quality of life to all through its business. Healthcare professionals use their medicine and medical device to treat and manage respiratory, dermatological, cardiovascular, gastrointestinal condition and more. Consumers use the range of company of consumer healthcare product to enhance their well-being. Next, I want to discuss Al-Aqar Healthcare. Al-Aqar Healthcare is established on 10 August 2006 and listed on the main market of Bursa Malaysia. Al-Aqar embarked on its journey with a modest portfolio of 6 properties. Over time, it has transformed into a robust entity, now encompassing an extensive portfolio of 24 properties spanning diverse segments with a notable focus on healthcare. This diverse segment includes 70 hospital, 4 wellness or health center, 2 college and 8 landscape. At the helm of Al-Aqar Growth is Damansara Rex Manager Sena Berhad, broadly serving as the fund manager. As a wholly owned subsidiary of Johor Corporation and supported by KPJ Healthcare Berhad, the RMSB has played a pivotal role in fostering Al-Aqar Growth. As at 31 December 2023, Al-Aqar Properties value stood at 1.64 billion and market capitalization of 1.04 billion.
Assalamualaikum warahmatullahi wabarakatuh. My name is ZULFIKAR. My metric number is 2970. I'm gonna explain about Apex Healthcare Berhad financial ratio. There's a liquidity ratio, activity ratio, profitability ratio, and leverage ratio. The first one, I will explain about liquidity. The liquidity ratio is strong, with a current ratio of 3.70 and quick ratio of 3.04, showing a robust ability to meet short-term obligation. For the activity ratio, the activity ratio is efficient, with total assets turnover is 1.00 and account receivable turnover of 5.03. For the profitability is high, with a profit margin of 42.8% and return on equity of 54.28%. And the last one is leverage ratio. The leverage ratio of Apex is low, with a debt to assets ratio of 18.2% and debt to equity ratio of 22.25%. So Apex Healthcare Berhad demonstrates strong liquidity, efficient assets utilization, exceptional profitability, and conservative leverage position. These metrics indicate a financially healthy and efficiently managed company. That's all for me. Thank you.
Assalamualaikum. My name is MEGAT HAZIQ bin HAMADI and my metric number is 308223. Today I'm going to explain to you liquidity ratio. The first one is current ratio. As you can see, we got 1.55. It shows you that it can be a positive sign for creditors and investors. The next one is quick ratio. We also got 1.55. So it shows you that inventory makes up a very small portion of the company current asset. Activity ratios. The first one is total assets turnover. As you can see, we got 0.07. So it shows that the company generates a very small revenue to its total assets. And the second one is account receivable turnover. As you can see, this report does not include account receivable details, so it cannot be calculated directly. Probability ratios. The first one is profit margin on sales. As you can see, we got 52.3%. It shows you a strong profitability which can provide the company in growth, pay debt, or distribute dividends to the shareholders. And the second one is return on common shareholders' equity. We got 5.9%. This is considered a modest return, which may suggest that the company is generating some profit, but not at a high level relative to the equity invested. And the last one is leverage ratios. The first one is debt to asset ratio. We got 0.422. This indicates that 42% of your employees' assets are financed through debt, while the remaining 58% is financed through equity or other non-financing methods. The second one is a debt to equity ratio. As you can see, we got 0.73. This indicates that the company is managing its debt load reasonably well.
My name is Muhammad ZIKREYLLAH, and let's start with a comparison between each company. Let's go. The ratio of the healthcare Berhad is in better short-term liquidity position than the Accor healthcare Berhad, based on the current ratio. A current ratio between 1.5 and 3 is generally viewed as healthy, suggesting that the company has a good buffer to meet its short-term obligation. With a 3.7 ratio Apex Healthcare has a better liquidity ratio compared to Al-Accor with 1.55. The quick ratio is a financial metric that evaluates company ability to meet its short-term ability using its most liquid asset, focusing only on assets that can be quickly converted to cash. With a 3.5 ratio, Apex Healthcare has a better liquidity ratio compared to Al-Accor with a 1.55. Apex Healthcare Berhad has demonstrated superior efficiency in a resource utilization compared to Al-Accor Healthcare Berhad. As indicated by its higher financial ratio, this efficiency suggests that Apex is likely to generate more income. Next, we move to the total asset turnover. Apex Healthcare Berhad demonstrate superior efficiency in resources utilization compared to Al-Accor Healthcare Berhad. As indicated by its higher financial ratio, this efficiency suggests that Apex is likely to generate more income. In contrast, Al-Accor Healthcare Berhad shows a weaker operational performance, generating only 0.07, which is 7 cents, in sale for every ringgit invested in total asset. This indicates a higher level of operational efficiency relative to Apex Healthcare. Overall, Apex Healthcare's stronger financial metrics and cash flow position it's favorably in the healthcare market. Okay, next. When comparing the profit margin on sales, Al-Accor Healthcare Berhad had a 52.3 profit margin, while Apex Healthcare Berhad had lower profit margin, 42.8%. When it comes to profit margin on sales, it looks that Al-Accor Healthcare Berhad is keeping a larger portion of its sales revenue as profit. For return on common shareholder equity, Apex Healthcare Berhad had return on common shareholder equity of 54.28%, indicating effective use of equity, as each ringgit invested generated profit for 54.28. In contrast, Al-Accor Healthcare Berhad has a much lower return of 5.9% only, suggesting less efficient utilization of its equity for profit generation. Other than that, Al-Accor Healthcare Berhad has a higher debt to asset ratio of 42% compared to Apex Healthcare Berhad lower ratio of 80%. This indicates that Al-Aqar relies more on debt to finance its assets, suggesting a greater financial risk. In contrast, Apex Healthcare lower ratio implies a more conservative approach to leveraging debt, which typically indicates lower financial risk for investors and analysts. Lastly, Apex Healthcare had a lower debt to equity ratio of 0.22% only, indicating it has less debt compared to its equity, which may result in lower financial risk. In contrast, Al-Aqar Healthcare has a higher debt to equity ratio of 0.73, suggesting it relies more on debt for financing. That's all from me. Let's move to the next part.
Hi, my name is Ashtani Cheng. My matrix number is 308250. Today I'm going to be talking about the suggestions on how both companies can improve their performance. So let's start with Apex Healthcare Berhad. While Apex has a strong cash position, it can put its idle funds to better use. By investing in profitable projects, expanding into new markets, or diversifying product lines, the company can enhance profitability without risking financial stability. Improving inventory management through just-in-time systems or automation can also reduce storage costs while maintaining its strong liquidity. To increase its revenue, Apex should focus on boosting its asset turnover. This can be achieved through technology upgrades, expanding its market share, or offering premium products. Profit margins can improve by cutting costs, negotiating better deals with suppliers, and outsourcing non-core tasks. Apex's low reliance on debt is a strength, and maintaining a balance between equity and borrowing can support its sustainable growth. Next, Al-Aqar Healthcare Berhad. Liquidity is a concern, as its current and quick ratios are pretty low. The company can address this by restructuring its short-term debt, negotiating extended payment terms with suppliers, building up cash reserves. Enhancing operational efficiency by training employees, upgrading technology, and selling non-core assets can free up resources and improve asset utilization. To reduce risk, Al-Aqar should aim to lower its debt levels by consolidating high-interest loans or raising equity. Diversifying revenue streams such as offering outpatient care or telehealth services can enhance profitability and reduce dependency on a single income source. Cost-cutting initiatives and streamlining processes will further strengthen financial performance. By implementing these strategies, both companies can position themselves for long-term growth and stability. Thank you.